Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So this week, guys, on the gold market analysis, we have taken a look at a few important issues as we think for the gold. In particular speaking, we considered two geopolitical events, which is the earthquake in Turkey, which actually we're not considering the earthquake per se, but what the consequences it could bring to the Turkey and its place in the geopolitical game. We think that it's important for a long-term gold market performance. And second is the Joe Biden speech to the Congress. We see the big tectonic shifts behind it, mostly in United States government establishment and the general trajectory of the development of the US economy. We think that it's a really big event. It's nothing occasion could be with the recent Joe Biden statements that he probably is not ready yet for 2024 election, and maybe he will not take the part in it. So we think that it's not occasional, and it's also brings some important events behind it. So this stuff we have tried to discuss. And second moment, which we think also important, is that in the recent time we see more and more headlines, news articles of the respected analysts, market society, in Twitter you could find a lot, where some gentle doubts, been acknowledged concerning the statistics of the United States. As many people have some doubts concerning the recent employment report, concerning the CPI numbers, and it's some gentle suggestion have made that maybe it's not really it's slightly adjusted. We have talked about this actually since the middle of the 2022, where we said that recent statistics doesn't reflect correctly the real situation in the United States economy. And we have brought some opinions, some really explanation, particularly speaking on the recent new non-farm payrolls release on the CPI numbers, and explain why actually this is usually done in the United States, and what the kind of particular adjustment and artificial manipulation of the statistics have been brought, and where it could lead us. Now it's actually many traders and analysis just call you to use the simple math and comparison with the crisis of the 80s and the Paul Volcker period and current situations, comparing of the different budget deficit, comparing the different level of the national debt. They had just using the simple math to come to conclusion that it is impossible to in some acceptable way to resolve this problem. Within the 1 or 2 years, the overall deficit could come to the 4 trillions, and it's just like the snowball. And it's no exit from these problems. Lots of other issues exist currently in the economy, but that's few moments leads us to be extra careful with the statistics and the market response. But for our situation, what is important is that if you have this type of action on the gold as a response to the non-farm payrolls release, but non-farm payrolls have been manipulated, how we could rely on this, and whether this is a really reliable factor to suggest for the drop, or it might be really fast revision in the opposite direction, for example in February, or some indirect indicators could suggest that it's maybe not really so. And then we'll already have lots of contradiction between different statistics. For example, positive gross domestic product and strongly negative retail sales. But retail sales actually the 70% of the gross domestic product. You have mismatch in the different statistics in the inflation indicators and so on. So I think that it's useful to read, especially where trying to bring it really simple and interesting to read actually. So I think you will enjoy it. So from the technical point of view, we expect that this some kind of the artificial regulation of the United States statistics sooner rather than later it will come on the surface, and it will become evident. But it will bring lots of volatility currently on the market because a lot of people still believe that it's really big positive shifts now stands and market is ready for a soft landing and soon upside reversal, which is actually not quite so. And increasing the volatility could make it really difficult for trading gold, especially on the daily and intraday charts, because some things that we previously could treat as a changing of the trend and this new direction and sufficient momentum for planning the trades in the same direction using this momentum in new reality could be just minor swings that could be really turned in the opposite direction really fast. So it could be really difficult. But at the same time, the major idea of our dealing with the gold market that we should use any pullback as a chance to accumulate physical gold and to invest more. This remains the same. So here we have no changes. Now speaking on the short-term technical situation, it's very similar to the euro currency. Yes, gold stands a bit more extended to the downside. It closer to the weekly bread and butter trade. So on the gold market as on the euro currency, we also could get as a bread and butter, as a double repo. It's also start flirting with the MACD predictor on the next week on the weekly chart. And it's also CPI probably will play the dominant role in estimation what the pattern we will get, either the double repo sell or it will be the bread and butter buy. For the bread and butter, market has to drop a bit more, somewhere to the 18. Let's take a look at 1830 support. As you can see here, it's to this confluence support and the daily result. In this case, it will be a perfect opportunity for taking the long position because upward bounce might be really significant. So currently, at the same time, on the daily and intraday charts, we still have lack of the evidence because previous performance, we were waiting last week for response to the strong support, but it hasn't happened. On Friday, we said be really careful with the possible taking the new short position, although it might be more extended reaction. But market in result, as you can see, dropped a bit more, even has formed a reversal, bearish reversal candle, and hasn't shown any pullback. What does it mean? It means that how I understand it right now is that this performance that we have here, it is not the continuation of this one. This is not new extension. This is just the rest of the momentum of this initial collapse that was really fast. It was minor pause. You can see the spikes shows that bears are relatively strong, and that was just the residual of this action. So the upward bounce still could stand ahead. So once it will be completed, we should get the continuation. But what the bounce will be, what the degree and scale of this bounce will be, it mostly will depend on reaction on the CPI numbers. Big surprises could lead to the big moves. And here, since we have really very strong upward action here, we still could get more or less significant pullback, which could lead us the double repo sell pattern on a weekly chart. If it will be weak CPI numbers and it's really market will just keep dropping lower, in this case it's also will be clear as we will be able to consider the bread and butter buy right from this area. So whatever will happen, we should get the great chance for position taking. That's why currently these points take additional risk trying to anticipate market moves, trying to act without the patterns, without the evidence. I think that this risk is not worth it because we have the big patterns on the weekly chart on the table, and if we will wait a bit and for clarity, we will miss the opportunity to trade weekly patterns. And taking in consideration this, some balance, I think that it makes sense to wait and see what will happen, rather than trying to, take the trades without really good context. The same we could say on the hourly chart, and the same what we said on the euro currency. Yes, at first glance we've got the drop, but take a look at this drop. Actually, market has just washed out the lows, but it was not the real breakout. So market is returning right back up. Right now we have some divergence around the strong support area, And this song is not completed yet. I mean the song of the possible pullback. Potentially, for example, we could get double the reverse hand and shoulders patch, 127 hand and shoulders still might be formed. From that standpoint, this market mostly shows a kind of the indecision action. I would prefer to wait a bit and see what patterns will be formed, what finally will happen. Because waiting for clarity on the daily chart, on the hourly chart, well, it makes our task significantly more simple for dealing with the weekly patterns. Just give us a clarity. And that's just a simple conclusion that we could make right now.